This is Scott Becker with the Becker Private Equity and Business Podcast. Here are 5 quick notes for today, and thank you for listening. First, the markets yesterday were really a tale of two markets. As concerns about inflation generally drove the markets widely down, with the Dow Jones having its worst day in more than a year. Second, at the same time, NVIDIA had absolutely great results, and this drove that stock and the tech sector up. In fact, NVIDIA was up more than 9% yesterday, so just wowed Wall Street with its results. Second, 10 of the 11 sectors fell yesterday. The S&P sectors fell yesterday, and just the technology sector finished up. Third, as Treasury rates and CD rates stay very high, particularly with short-term durations, the 1 year is still trading above 5% or so, 5.1%, 5.2%, which are sort of long-term highs for Treasury yields. The great question becomes, at what point do you start to ladder your treasuries so that you're extending duration and so forth? And what happens when you extend duration, you give up some basis points, you give up some returns. For example, the 2-year treasury is trading about 4.9%, the 1 year about 5.1%. But if you take the 2 year, you've locked in 2 years of results at 4.9% versus the 5.1%. At what year time do you start to make some of those trade-offs? Fourth, global stocks generally slipped on Friday, heading for a weekly loss after this data signaled that there's still significant U.S. inflation going on and significant growth, and that was sort of bounced off or sort of crossed with the NVIDIA results, which were fantastic. Finally, fifth, we'll have a separate podcast on 5 phases of building a business, a very short concept there. We hope you listen to that. Thank you very, very much for joining us today on the Becker Private Equity and Business Podcast.